This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's agriculture and energy-related futures rallied on the first day of trade after the Lunar New Year break, with contracts hitting record and multi-year highs early in the session, boosted by supply concerns and external market gains. The Dalian Commodity Exchange soybean meal futures and the rapeseed meal contract on the Zhengzhou Commodity Exchange jumped by at least 8%, with Zhengzhou's rapeseed meal contract hitting a record 3,445 yuan, $542.06, per ton on Monday before closing 8.4% up at 3,425 yuan. For edible oils, soy oil and palm oil futures on the Dalian Exchange rose as much as 5% to 6%, with the contracts climbing to their highest since September 2012 and July 2008 respectively.
New signals that talks between U.S. and Iranian officials may be nearing a conclusion could take steam out of the oil rally, traders said, after U.S. and Brent crude reached multi-year highs on Friday. Anticipation that Washington and Tehran have made progress on reviving a deal restricting the OPEC countries' nuclear weapons development would boost crude supply. If the United States lifts sanctions on Iran, it could boost oil shipments, adding to global supply. Brent crude fell 5 cents, or 0.1%, to $93.22 a barrel at 10:12 p.m. Eastern Standard Time on Sunday. The benchmark settled at $93.27 a barrel on Friday, having earlier touched its highest since October 2014 at $93.70.
Moving on to the top news in the energy sector.
Oil prices fell on Monday as concerns over tight supply were offset by signs of progress in nuclear talks between the United States and Iran, which could lead to the removal of U.S. sanctions on Iranian oil sales. Brent crude was down 61 cents, or 0.7%, at $92.66 by 14:45 GMT, having earlier touched its highest since October 2014 at $94. U.S. West Texas Intermediate crude fell $1.11, or 1.2%, to $91.20 after touching $92.73. U.S. President Joe Biden's administration on Friday restored sanctions waivers to Iran to allow international nuclear cooperation projects as talks on the 2015 international nuclear deal enter the final stretch.
U.S. natural gas futures fell about 6% on Monday as output slowly recovers from last week's freezing weather and on forecasts for less cold and lower heating demand over the next 2 weeks than previously expected. Over the last 2 weeks, trade in gas futures was the most volatile on record due in part to worries that Winter Storm Landon, which battered the eastern half of the country last week, would cut output and boost heating demand like last February's Winter Storm Uri. But Landon, with just 1 day below freezing in the wet Texas Permian Basin, was much weaker than Uri, which froze West Texas for 8 days in a row. Next, we have the top news in metal markets. China, the world's top steel producer, said on Monday that it aims to significantly increase mines' iron ore production and boost utilization of steel scrap, as part of a plan to develop a higher quality, greener ferrous industry. Making a joint statement with the state planner and environmental regulator, the Ministry of Industry and Information Technology, MIIT, reiterated a desire for consolidation and restructuring in the steel sector. But no specific goals were given, unlike a draft plan released at the end of 2020 that had aimed for China's top 5 steelmakers to account for 40% of total steel output by 2025.
Gold prices climbed to a more than 1-week high on Monday, supported by inflation worries and lingering geopolitical risks, as markets awaited key U.S. inflation data for cues on the Federal Reserve's interest rate hike trajectory. Spot gold was up 0.4% at $1,813.93 per ounce by 9:44 a.m. Eastern Standard Time, after hitting its highest level since January 27 at $1,816.86 earlier in the session. U.S. gold futures gained 0.4% to $1,814.70. There's a bit more flight to safety buying in the gold market. The main concern right now is where are we headed with inflation and how aggressive the Fed will be, said Bob Habercorn, senior market strategist at RJO Futures.
We will now look at the top news in the agricultural sector.
Malaysia's palm oil stockpile at the end of January likely stayed flat, as both production and exports in the world's second largest producer plunged to an 11-month low, a Reuters survey showed on Monday. Inventories in the Southeast Asian nation are forecast to tick up 0.34% from the month before to 1.59 million tons, according to the median estimate of 8 planters, according to traders and analysts polled by Reuters. Production is seen shrinking 10% to 1.3 million tons, falling for a third consecutive month to the lowest since February last year. Exports are expected to slump 21% to 1.12 million tons. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.